Here we were on Monday, so we've had a 2-day bounce. Basically, the euro just grinded sideways to lower, retesting the NFP low at 108, has held it so far. Can't rule out a stop hunt under 108, but the dollar looks vulnerable. And I said that we need closes back under 98 to confirm that this is A and we've completed B and we're on our way down for 3, or C. So to me, this is kind of a weak day. Actually, I do believe at this point, with all the worries and concerns in global equity markets about the price of oil and the problems in the junk bond market because of MLPs, that the markets would actually welcome a weaker dollar, which should put a floor under commodity prices. Crude made new lows, still groping for a bottom. A lot of people are talking $25, even $10 crude, and maybe they're going to be right long term, but why not a short squeeze first, initially to $35 crude, maybe $38.40, and I think that you'd get a relief rally in the stock market should crude find its footing and begin to recover. But based upon the dollar, I think that there are problems in the dollar, that we may have completed ABC and we're on our way down, but we're not going to have confirmation. Your first sign would be closing back under 98.5 and 98, and then you just have a measured move, call it par and a half, call it 3.5 from this parabolic. That would give you 94.70, actually 3.5 from here. Or if you take the 3.5 from here, it's going to give you 96.50. So that's my bias. My bias has been that we're going to get a rally back to resistance in the euro towards 110, 110.50, eventually heading up towards that 112, 113 level. So dollar looks negative. In fact, the pound is beginning to actually outperform as EG is moving sideways. So the pound actually put in low at important support without divergence. On Monday, I talked about a recovery in the yen. We got a recovery in the yen, well over 200 pips from the low on Monday. And now the yen is pulling back, which might be a B wave before we get a C. Canada is still heading up towards this major target resistance between 42 and 350. It's going to tie in closely with the crude, but as you can see, the crude's having a hard time bouncing, even with Russia talking about cutting back on supply. I think it's going to take a weaker dollar to support it. I cannot be long Canada up here. I cannot be short crude down here. So again, crude's done nothing right. It's not diverging, but the whole world is bearish, talking about maybe we need to crack the psychological $30 level. But in my view, I think there's potential for crude to surprise the market, rally back towards this $36, $38, even $40 level. So still on the lookout for top in USD CAD. Much more conviction about the dollar itself, which includes the euro, and I think we're headed lower. Gold went to important support and held at 1080. So far the Aussie has not been able to make a new low. I know there are people looking for it, but perhaps we still have some more upside before we turn down. We'll get to the Aussie in a minute, but gold pulled back to where it had to, held where it had to, which gives me a bit of a positive bias on the Aussies. Canada making new successive highs after highs. Yeah. And just still thinking there are going to be better shorting opportunities. The yen held where it had to. I think there's going to be opportunities. Saying sell everything. So we had the high rally in the past couple of days without much success. I still think there's a recovery coming. The S&Ps, and it may be The catalyst would be a recovery in crude oil would be enough to generate at least value back towards S&Ps. Although we're going to hurry, my preferred count is that we still get some type of recovery in S&Ps. Any questions? Which is supporting US, and we got the recovery in US dollar yen for at least the first leg of the recovery, now in a pullback mode, and then maybe another recovery. Whereas, any questions on the outside markets? S&P's under pretty good pressure here now, down 11. Any questions on the correlation? Okay, let's get to our individual instruments. We always start off with the Euro USD. So here we were after this was the NFP low. All we did was grind sideways. I never even took out this low, held it by a pip. So I'm sure that there's a ton of stops on the way. Well, if we got some bullish news, we could spike it maybe to 780, 760. But to me, again, I believe the path of least is we have this first wave up and we've been consolidating and we start clearing today's highs over 880. I believe move is going to take us above this resistance at 110 and head up towards 110.50. So I talked about this, find the break. If we get this dollar pullback, there should be some upside for at least a third drive extension, 1, 2, 3. That could take you up to above the 110 level. Be on the lookout for a stop hunt under 8 low, but I don't think we're just going to crash under 108. It could just be a stop hunt and then a reversal. Give me a Y if you're with me. The big picture being that I'm still looking for this up channel that was broken in the euro to give us some type of retest of this channel. It's now coming in down the road up around the 113 level. Again, you can't rule out one more retest, even down towards 676. But so far, so good. After this big move, we're mainly just working off the overbought condition by moving sideways. And the look on the dollar chart to me looks lower and therefore higher in Euro USD. And some targets to keep in mind would be initial resistance up here in the low upper 1990s, and then we have more resistance up here at 110 up here, which would come into the highs of wave, and then eventually potential back test of a breakdown towards 113. Give me Y if you're with me. Euro USD. We've gotten a nice bounce in the cable. The only thing that I don't like is we confirm the low. We could still buy around the 44, 43.50 level, so you have some 100 pips made. Perhaps we're just going to get an ABC back to 45 before we get one more low, but with my bias on the dollar, I still think that there's higher to go in the pound, that this could be a significant reversal that we're getting here on the daily on this inside day, and that eventually we're heading up towards the 780 level. And you can't even rule out a test back up towards 149, 150. If I'm right about the dollar, pound should begin to outperform. I'm not getting a lot of directionality from the euro pound. So far we've had one lower high. I talked about selling a rally up here around 5.25. If you did that, you had 50 pips made, but I'm not looking as much like a head and shoulders as much as a symmetrical triangle. So I'm neutral here. You know, my longer term objective was up towards the 87, 88 level, but right now we have a triangle. Most likely it's some type of continuation formation, but we're going to have to get back over the 75.50 for that to resume. So I'm calling this sideways for now. neutral for now, unless we break out over the 75.40, and then you're looking at 77.78. So it's not giving me a preference on being bearish a dollar, which I should be long, euro or pound. My best guess is euro, because euro did diverge and has been leading the way. So it's very possible this is just a sideways move in euro pound before another advance. Give me a Y if you're with me. On Monday, I talked about a recovery occurring in the yen. We were down here. So we've had a nice recovery from significant support, pointing out this support. So we may have had the first rally off the low here, and maybe we get a pullback down towards the low 17 area, thinking this was A, and perhaps we get a B back down towards 720, 1720, and then once we get over 1848, you could measure 140 pips from 1840 is going to give you 1980, which is close to halfway back. So that's an area I think the yen could go to, but I'd actually be looking to buy breaks in the 107.10 level with stops under about 20 pips under the low of the move, looking for 1980 in the days ahead, and not an outright crash in the stock market, not yet. Give me a Y if you're with me on my view of US dollar yen. If you were there for the first wave, congratulations. It was good for from 1740, 1880, 1840, about 100 pips or so. So we could pull back 60 and then launch again. Back over this 50-day moving average, I think we head up towards a 50% retrace level. So that tells me we're finally going to get a recovery in the crosses. You know, I'm very bearish a guppy. I'm looking for 160, 150. So we want this rally to occur. I thought that we might have a chance to head up towards this level, back up towards the 75, 76 level. That would be a great entry. I don't think we'll get all the way back to the breakdown, which was at 180, but looking to sell rallies possibly starting around this 173 level, some type of correction. I don't even think we'll fill the gap. This would be ideal back at this breakdown line at 77. So let's just let this play out, see what kind of rally we could get in guppy. We get some type of break in the dollar. The guppy could recover. We've had one heck of a break, which we were there for, looking, you know, when I was talking 180, people thought I was crazy. Then 170, people thought I was crazy. I think eventually we could head towards 150, but I'm going to be patient. I'm not going to short it down here. We could even consider perhaps some type of little counter trend move. We have 1, 2, 3 drives to a bottom and divergences. So maybe if they take it down one more time towards this 168 level, you could consider longs for at least a short-term target to 173, and perhaps some fib retracements back towards 174.75. Euro yen had a positive look too. We have a higher low here in euro yen, unlike what we had in the guppy. So if we could clear this level at 28.5, I think there's a chance we head up towards the 130 and have some equality to this initial rally. Should hold on breaks, any pullback right around this 127.30 level before we get a C wave back to the upside again. Not the cleanest divergence. So the yen crosses, instead of trying to ride them counter trend, you may just want to be patient and look for rallies to sell down the road. Similar story in the Aussie yen. Aussie yen looks a bit weaker to me. We've had one drive, 2 drives, there could be another. It's neutral to me. I'm not going to just jump on it. There are some sharply lower targets on the weekly. This is a risk-off trade, but I'm not interested in shorting it down here. I want to see some type of retrace before I consider it. In fact, on the weekly, you have pretty good divergence here with a 1 and a 2 and a non-confirmation here. So We'll see if we could get some rallies, maybe a 300 pip rally back towards 85 to try shorts there in the crosses. Any questions on the crosses? So actually, the thing I have the most conviction about is the dollar index looking like it could head south. Euro's been leading the way. So I would say the euro I have the most conviction on. It's the cleanest chart that I have. Euro pound is sideways. Yen, maybe an ABC. So let's get to the Aussie because I talked about a buy at 69.5. And we went to 69.20. I was open to the potential that we put in a new low to get a third drive. Don't think that's going to happen. In fact, this is our second or third successive higher low, and we haven't made a new low in Aussie since all the way back here. So far, it's held where it's had to hold, and perhaps we get some type of back test here, just like in the euro, where the euro retests its broken uptrend channel line, and that would take the Aussie back up to 71.23. At that point, perhaps consider shorts, but not down here. Perhaps what we're looking at is an ABC that's not completed, and we head up to at least a 70.80 level. So from 69.5, that was a pretty good call. So with my bias in the gold, I think you still hold on to the long side of the Aussie, that there's more left. If we start closing back over this 70.30 level here, and the low is 69.30, that would take us to 71.30, which is what I was talking about. A retrace back to the breakdown here, 71. There's actually quite a bit of sideways action going on in the new year. Most of the volatility is showing up in indexes, in equities, and actually lower volatility levels in currencies. So here's the Canada. I talked about shorts again at 42.5. So all these shorts with divergences have worked out for, this one was good for 50 pips, 70 pips, 80 pips, and here we are knocking at the door again for a potential new high. I have return lines up here at 3.5. So anytime you have 50 on it, eventually I do think there's going to be a big correction. An important level to watch is going to be right here under 141.80. Under 141.80, the correction should begin in earnest right here. So it looks like we might have one more drive up here. Here's one, here's two, maybe one more up towards 3.5. But I can't short $30 crude, and I can't buy 143 euro. Still think a correction is coming, starting to sound a little bit repetitive. But there have been some divergent scalps which have worked. They just haven't worked big. They've worked for 70 to 80 pips each time on the divergence, so decent scalping action. But I think eventually, once we take out 41.80, we're going to be headed back down towards the 140 level, 141, 141 here, and possibly back towards 138. So it's quite a contrarian call, trying to look for a low in the crude and the top in Canada, but I'm sticking by my guns. Any questions on that? So the euro crosses still look good to me, euro Aussie. This looks like it developed some type of ABC, and we should be on our way back up in euro Aussie with a weaker dollar and the Aussie underperforming. So looking for a rally in euro Aussie. Your line in the sand is under 153. Perhaps we get a rally back to new highs in euro Aussie. If we get that rally to 112, 113 in the euro. Euro CAD. with the CAD being strong and Euro being strong, I have a hard time wanting to press alongside up here. You know, we may just have one more pop before the correction, just like Canada. But again, a lot of choppy action. I'd lean more towards the short side, maybe a 50, 80 pips higher in the coming days, predicated upon weaker USD CAD and the recovery in the crude oil market. Any questions on that? Okay. So I cover a lot of pairs, everyone, but you know, I knew traders that were in one pit their whole career, and it only takes one. So my view is still a weaker dollar. Again, this week, not the same type of conviction I had the week before when I saw this dollar rally coming. Perhaps we need to have one more stop hunt under this, one more rally in the dollar, but I have a lot of neutral biases here, so what you want to do is just scalp. But pound looking a little better to me for a possible ABC than the euro at this moment. But still think that there's destiny before we take out this low down here. Even if we worked lower over time, I'm still looking for higher lows in the euro USD. But very difficult trade here since we called the dollar rally up here. Then we had the rally prior to the NFP and then a pullback. To me, it looks like on break, I want to be long euro USD. Pound's way overdone, but what bothers me about the pound is a confirmed low, so just scalp it. Previous support could be new resistance here. Eventually, if I'm right about the dollar, I do think we have 146 to 150 coming in pound dollar. Give me a Y if you're with me. And the yen's going to be very important here because this is really the key to a global market panic. Is should we ever take out the August flash crash lows, which we haven't yet, then it's going to be risk off in a big way, and all the yen crosses should head lower, led by a breakdown in the yen. You know that my long-term targets, I talked about this being the head and shoulders, up here, the shoulder. So we're holding support right here, and I'd buy breaks looking for 1980 to 121 in US dollar yen, which is a little counterintuitive if I'm looking for a lower dollar. But while I was looking for a higher dollar, US dollar yen did head lower as well because of risk off. So we have risk off in the market, and the yen's really not giving up a ton of ground. A nice buy point would be right around here, around this 107.27 level. And then you just risk the lows under 106.16. And perhaps we get this rally back to 119.80. And if the market really gets going, maybe 121. Any questions on what I've covered here so far? And also, I'm not going to, I look at the US dollar Swiss, haven't covered this for a while. The Euro's actually holding up much better with US dollar Swiss setting up. So still a believer that I avoid trading the Swiss since it came off the peg. Prefer to stay with the Euro. The dollar index is giving topping signals. The whole world is still bullish the dollar, and it's my thesis that actually a weaker dollar could be a remedy for all the panic in global equity markets right now. In fact, That should stabilize the devaluation of the yuan as well, which has been a problem for global markets. A lot of people think that the Chinese have lost control of their currency. I'm not so sure about that, but we could get some type of stabilization in the yuan, the dollar could come off again. So those are my views. Any questions on anything that I've covered here today? Again, I'm looking at this dollar index. S&P is under a lot of pressure. Maybe they're going to try and make new lows here. I think we're almost there. Yeah, almost there. But still believing that the dollar is rolling over and still in favor of selling dollar strength instead of buying dollar weakness. Here again, as you're looking the dollar neutral day, not saying we can't go to 100, like I said, was a possibility, but again, very neutral thing. So, you know, there's not a lot to talk about, but we were right about this recovery in the dollar from down here, looking for this into the NFP. It happened after the NFP, prior to the NFP. So we'll see if it could keep grinding higher and give us better dollar shorting opportunities, but it's possible that it could be ending here. We'll know for sure, closing back under 98.5 and then 98. Any questions? So during my periods of not having high conviction, it means there's probably not that much going on, so I have to talk more in broad strokes. But my bias is that the dollar peaked on Draghi, at least for a corrective process. And even if the dollar is in a bull market, it could pull all the way back down towards these lows again and just be an ABC before it heads up again. So looking for a lower dollar. I still think initially 110 and then 112.50, 113 is destiny in Euro USD. Any questions before I say goodbye? I want to thank everyone for their attention today. Good hunting, reduce leverage. In fact, I wrote a little song about it. I don't think RoboForex would care if I sang it to you. It's called Use Less Leverage so that your accounts can survive. And it goes like this. Use less leverage when you trade the markets. Use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use